A good day to the credit union community. Here are our 3 topics for today. How can you reduce friction and increase alignment by adopting a radical transparency policy? Would you rather hire a talented specialist or a capable generalist? Loyalty to the credit union is dead. How can you grow your members' share of wallet? Welcome to Grow Your Credit Union. I am your host, Joshua Barkley, and we have with us today another guest host, the CEO of Connects Federal Credit Union, James McBride. James, say hello.
I'm going to try to channel my inner Becky Reed here. Howdy, y'all.
Glad to have you back, James. Before we begin today's show, I want to first mention our fantastic sponsor, InvestiFi. They are the only self-directed investing platform that allows members to buy, sell, and trade directly from their checking account within their online banking portal. We will be talking more about that later in the show with today's sponsored guest, who we will introduce in just a moment. But first, James, you're back. I'm glad to have you back. You had a great show with us previously. How are things going with you?
Man, we're having a lot of fun here in Virginia, putting together the puzzle pieces to really put this credit union in place to really grow and really serve our community in unique ways, especially moving into 2025. We're really excited about what's going on, the partnerships we're developing. And so really glad to be here. This podcast really helps challenge leaders just like myself to think about things in a new way. And so that's what we're doing here at Connects. We're thinking about how we do community banking in a new way.
James, I love to hear that. Let's kick things off. I want to introduce our guest for the day, the CEO of InvestiFi, Kian Sureshta. Kian, say hello.
Hello. Thank you for having me.
In a Harvard Business Review study, 500 employees from different levels believed their companies were 82% aligned with corporate strategy. But when Harvard Business Review researchers looked closer, the real alignment was only 23%. And Forbes suggests that the remedy for this kind of misalignment could be, drumroll please, radical transparency. Companies that embrace transparency reportedly enjoy 21% higher profit margins, along with lower absenteeism, better customer service, and stronger collaboration. Kian, you've been a strong advocate for radical transparency in your leadership. Can you share how you've successfully implemented this strategy within your organization?
Yeah, absolutely. And I think it really starts with being able to first communicate the vision and where your company's headed. And, especially at a startup, I think it's incredibly important with how fast that startups need to move to remain competitive. And just the fundamental point of transparency, if everyone's not on the same page with how fast you're moving, there's going to be things that get missed. And I think one of the most common things that we see with startups is missing deadlines on launching new products, new features, et cetera. And so to us, having transparency really across the board is rooted in our Slack communication. And I think it could be unique to remote companies, but the way you set up actually your Slack communication is really important, where we really highly encourage everyone to be communicating as much as possible in public channels in Slack. And so on the sales side, we sell to credit unions and we get feedback from a credit union as far as what they're looking for in a solution. We can post that in our Slack feedback. And then the folks on the product side of things can go in and evaluate that feedback. And then on the flip side, if the tech and product teams are, collaborating in public channels, the sales team can go in and see what they're talking about and make sure that it's relevant, that we're actually communicating and working on projects and products that are actually going to benefit the customers that our sales team is serving. So that's just, I think, one way to go about increasing transparency in an organization that leverages a tool like Slack.
James, radical transparency, do you adopt that at your own credit union, and what does that look like inside your organization?
Man, I think it's one of the most important things that you can do. And I guess there's different ways to define that. When I think about our organization, I'm actually, in a lot of ways, treating our credit union very much like a startup, right? So what Kian was just talking about. And we're taking a credit union that's $85, $90 million in assets. We're trying to transform it into a growing I've used the word juggernaut here. That's kind of a future state that we're hoping for, right? But we want to position ourselves to be really successful. And so that takes knowing from the very bottom of the totem pole all the way up to the top what we're doing and why we're doing it. And communication, I think, is one of the hardest things you can ask a human to do successfully, consistently well. And so trying to teach people, like I was talking about how to communicate and when to communicate and what to communicate and in where that communication needs to live, so critical. I send videos out to my team all the time to let them know, what are we doing? Where are we at next? What's happening? What's coming in the future? I tell our team all the time at the leadership level, we've got to make sure that we're getting our messages, not just in that meeting room, down through the organization so questions can come back up. We've been starting an initiative. Let's talk about our wins, getting that communication to filter through the channel, all the channels in the credit union, what's going well for us so we can move forward. So being transparent in an organization, I think it's table stakes for success.
I want to ask you, Kian, I have a buddy, I won't say his name. He used to work for Bridgewater under Ray Dalio, who I don't think he invented radical transparency, but he certainly popularized it in his books and in his talks and speeches, etc. But one of the issues he had around radical transparency was people got kind of mean. It started to breed a culture of maybe disrespect or lack of sensitivity. So when you're talking about radical transparency, how do you balance radical transparency with giving others respect and not creating a culture that starts to get combative?
Yeah. So, I think you have to lay some ground rules, right? But a lot of those ground rules, I think in the professional world that we all operate in are unspoken. If you're the type of person that's rude or can't communicate cordially with someone that you disagree with, you're probably not somebody that we want at our organization, at least. And so that really hasn't been an issue for us. I would say the more that people can actually communicate the why behind decisions being made, the more adoption you'll get and the more receptivity you'll get from the other people in your organization. And I think that's one of the things that me as a younger professional, before I grew into a leader that I am now, I always got frustrated with. I would see leadership making decisions. They would announce the decisions, but they wouldn't treat the rest of the employees as though they deserve to know the why. And for us, the why is always incredibly important, even with, the smallest of decisions. And you mentioned something earlier around sending videos along with communication. For us, we use actually this specific tool called Loom, which we've gotten a ton of value from. You can essentially you use that too?
Yeah.
It's great because anytime you're wanting to communicate something, visual aids are always incredibly important. So Loom is just a tool where you can do voiceovers when you're showing like a demo or showing someone how to use a certain part of a product. And that usually helps communicate the why a lot better than just a few words of text, for example.
James, we love to talk about the how on this show. So if credit union leaders are listening and maybe they feel like they're not transparent enough, what is the first step? Because I know you to be a very transparent guy. You're a fairly new CEO to Connects Federal Credit Union. So when you came into the organization, how did you start to lay the groundwork for that radical transparency culture that you're building?
The first thing that I did, and I think is important, is to let people know that we're going to start by getting to know each other, right? I think that's so important. So where are we going to go? That's going to come. But at first, let's start to understand who we are today and start talking about who we want to become tomorrow, and then start to educate people on what that actually looks like, right? How do we accomplish that? So one of the things that we talk about here is, what is our North Star? And our North Star is going to have to get more specific over time, but we've got to earn that as an organization. So today I talk about loans to members specifically as the North Star for this credit union. And so how do we get there? And so in the next several weeks, as we lead into strategic planning and towards the end of the year, I'm going to start showing on Loom, as we were just talking about, what does our income statement look like? What does our balance sheet look like? And what are the triggers that are on those documents that are going to help people understand how their work that they do every day impacts those numbers and how it helps them and their bottom line and their home? And I think those are the things that are going to connect all the dots for the humans that are in the organization. People often want to know what's in it for me. Show them. This is what's in it for the organization. This is what's in it for you. And this is how those things connect together.
Credit union leaders are constantly on the lookout for top talent, but how we evaluate that talent can make all the difference. In his CU Insight article, 6 Reasons Your Credit Union Will Become Lethargic, Randy Pennington stresses the importance of prioritizing leaders who drive change over specialists who lean on past practices. In this instance, Randy is referring to leaders, but let's open the conversation to all employees. James, when it comes to hiring, who would you prefer? A specialist with deep expertise in a specific area, or a passionate generalist with a broad focus?
You hire for character. So the generalist for me is the place to start. So what does that person bring to the team that's unique? It's also important to ask, right? So you can't say, well, we don't need to have the right people sitting in the right seats. I think that's an important element of the team composition. But it has to start with, do we have people that want to be part of our company, that want to be part of the vision that we're trying to build and push us forward? Because if the answer is, well, I just kind of want to sit on my hands and sit on the stool and hope for a paycheck tomorrow, that's not going to get us where we need to go. You've got to have the right people that are motivated and passionate about helping move the cause and the company forward. That's the first place to start. They've also got to have the talent to deliver, but most of those things oftentimes, especially in the lower rungs of an organization, are teachable. So I'd rather have somebody that I can teach that's got the character and the will than I would to say, oh, I've got somebody that's got X number of years experience, and so I should be able to come in and do all the technical transactions. The technical pieces, again, I believe to be less valuable than the intangible pieces.
Kian, you're hiring specialist or a generalist?
Yeah, I agree largely with what James just said. You know, for me, I think about it more through the lens of a startup, and I think it really depends on the stage of the startup in terms of where you need to lean in more to. Generally speaking, I think you're going to get better value out of a generalist, but whenever you have too many generalists, and I equate that to having like too many chefs in the kitchen, then not enough like specialized tasks can always get done. And so I think as you look at like the growth trajectory of any company, but you know, especially a startup, early days when there's just a few people sitting around a kitchen table trying to figure out how to actually build a startup, you need every one of those people to be generalists, right? Because there's just so much to do and not really any room for specialists at that point. But then as you scale an organization, you get to a point where it does make a little more sense to have siloed functions, because you don't want 10 generalists just trying to write code for something that's going to be heavily specialized in a specific domain. And so when you have, I think, 5 employees versus 5,000 employees, it really makes a big difference in terms of how you think about hiring specialists versus generalists. And as you get bigger as a company, hiring specialists probably makes a little more sense. But I think it generally depends on the stage of the organization.
Yeah, if I could just add one thing quick to that. The other thing I would say is where I agree there. So we want to create sales as a main lever in our organization. How do we sell to our community? How do we sell to our existing client base, our members? How do we bring more people in at the same time? And what I've found in my 25 years in credit union land is most credit union people aren't very good at selling things. So when I said I wanted to go out and add a sales division, a sales arm to our organization, I'm looking for a specialist. I'm looking for somebody who has that skill, who knows what to do. They're coming from outside the credit union bubble, bringing them in so that we can have a real sales environment inside our organization. So I do agree. Generally speaking, I'm looking for the generalist, but there is that opportunity oftentimes where you need that specialist to come in and give you a shot in the arm in something specific.
Well, I saw something recently that was interesting because I feel though I'm probably specialist in a couple areas, but then a generalist in most others, which is probably like most people. And I saw something interesting. It said, I'd rather be a jack of all trades than a master of one. And I found that to be interesting in today's world where one skill, it depends on what it is, right? But I do think adaptability right now matters more than anything, given where we are, particularly with budgets, the economy, etc. So, James, when you're thinking about the generalist versus the specialist, do you agree with Kian? Because what I think is interesting is you're both sitting on two sides of the fence. Kian, you're CEO of a tech company. James, you're CEO of a credit union. As you grow, James, are you going to reevaluate the specialist versus the generalist, as Kian said? Because he's right. Early on, you're probably going to want a room full of generalists, but at some point, specialization matters to get things right. So is that your approach that you're adopting, James? As you grow, I don't know whether that's asset size, loan volume, whatever, are you going to start making that decision and leaning more towards specialists?
I think the more complex the organization becomes, the more necessary it is to hire talent that's already specialized in a function, because you're looking for something specific. When I think about the leadership arms of a credit union, I think about the word vertical. What vertical do they oversee? And whether it be lending or member services, accounting and finance, you want that person to really be able to own that function so that you can have trust and confidence, again, with this radical transparency that we're talking about all throughout the organization. Everybody has trust. Yeah, that leader is the right person for this team. In an environment where you've got a generalist, there's room for that. As you're less complex, the more complex you become, they have got to grow into that level of specialization to be able to continue to satisfy that function. So I think it really depends on complexity, but you've got to start with character. If you don't have the right character, the right passion, the right grit coming into the position, it really doesn't matter how talented they are if they're not going to help lead the organization in the right direction.
Hey, I want to take a moment to mention today's sponsor, InvestiFi. Did you know that while most Americans prefer investing with their primary financial institution, 99.5% of them look elsewhere, largely due to a digital-first offering by a fintech? If you want to keep your members and their assets while helping them build a financially secure future, you need to meet InvestiFi. As the only self-directed investing platform that allows members to buy, sell, and trade directly from their checking account within their online banking portal, InvestiFi's solution provides a seamless experience, helping your credit union deliver new services, attract new members, and deepen existing relationships, all while fostering financial security. Because InvestiFi's solution is integrated with your digital banking provider and banking core, the funds used to invest come directly from the member's bank account and back again when sold, not sitting in some third-party account, accumulating fees you can't leverage. Give your members access to an integrated investing solution from within their current online banking experience with you, their credit union. Bring investing back inside with InvestiFi. Visit them at investify.co to learn more. That's InvestiFi, InvestiFi.co to learn more. According to the Fed's survey of consumer finances, a record 58% of American households own stocks in 2023, reflecting a growing participation in the stock market. Yet I've noticed that many credit union leaders still aren't offering investment products in-house. James, with so many Americans now engaged in the stock market, do you think credit unions are missing a golden opportunity by not providing members the option to buy, sell, or hold stocks within their online banking portals?
The short answer is yes, but I'm going to give you a little bit deeper than that. Here's the thing. If you'd asked me that, say, even 12 months ago, 18 months ago, my answer would have been no, because I was looking at it entirely differently. The landscape is changing very quickly as it relates to consumer finance, right? And so what I see is like stock or a stable coin, things of that nature. I think about this is a commodity, and we buy and sell money. We don't deal in commodities, but the consumer market is shifting, and where people are investing and doing things is shifting all the time. It's going to continue to shift. So if credit unions want to stay competitive, they want to stay up and going, you got to start thinking about things differently. One of my favorite leaders, Ray Davis from Umpqua Bank, years and years ago, he was selling bicycles in branches on the West Coast, right? So we need to be thinking about how do we do things different? How do we approach things different? And so I think any time that you can offer a solution that you know consumers are buying inside of your credit union, give them a reason to do business with you, that's a smart thing to be thinking about.
Kian, I'm pretty frustrated by this because I hate the fact that I can't buy, sell, trade within my banking portal. I hate that I got to go to it was TD before, now it's a Charles Schwab, and then I got to move money from the bank over in Charles Schwab to buy. It's annoying and it's not convenient. So can you talk to me about what InvestiFi is doing to bring investing into credit unions where the money can stay and we don't have to do all this flim-flam moving money around?
Yeah, so I mean, we spent the last few years doing all the heavy lifting to make this possible, both from a technical standpoint and from a legal standpoint. We started our company as CryptoFi, which some people may still know us as, back in 2021. We really had the same thesis then as it pertained to crypto, where we noticed back in the crypto bull run in 2021 that a lot of people were buying and selling crypto on the popular third-party exchanges, and then continued to monitor the data meaning like the outflows that we were seeing from the banking cores of credit unions, and monitoring how much money was going to third-party crypto exchanges compared to the TDs of the world, the Schwabs of the world, et cetera. And with us wanting to provide the most value to credit unions possible by keeping deposits in-house, we actually saw that we'd about, depending on the credit union, obviously, but somewhere between about 5 to 10x more money was flowing out to platforms that offered stock trading than to just crypto trading. And so we leveraged those same banking integrations that we had already built over the last few years to actually go through a rebrand from CryptoFi to InvestiFi. Since then, we've been successful in being able to spin up the same experience on the crypto side as we can now with stock trading, ETF trading, and there'll be other asset classes coming soon. So one of the perspectives that I hear is it's actually taking away deposits when you offer another mechanism for your members to invest in assets that are going to go off balance sheet. But what happens when they're doing that already is they sell those assets and they stay in the walls of a Robinhood or a Schwab or a TD Ameritrade, and that money doesn't come back. And so, with our solution, we're very passionate about the fact that we can enable trading directly from checking. So the credit unions are the ones that are benefiting when those assets are sold, and they can recoup those deposits while still using this as a marketing tool as well.
So walk me through this. And James, if you have any questions, I mean, you are a credit union CEO, so by all means, step in. But walk me through this. So, because it sounds so good. And if I could do everything within my credit union's banking platform, I would. So for the credit unions out there that are like, this sounds good, what is the implementation time? Like, what are we looking at to get this moving within a credit union?
About 8 weeks. So it's very streamlined in the sense that it's already, for most digital banking platforms, we have 5 digital banking integrations built now, and we have more coming next year. So as long as we're already integrated with your digital banking platform and your core, which oftentimes we are, then it really just is a matter of setting up preferences within the environment, such as like, what's the trade limits? Do I want to charge any fees to the members, et cetera? And then walking through the training so all your staff knows how this program is going to be managed, and then you're off and running.
So, Kian, real quick, from a CEO perspective, we've been talking about transparency part of the day. Do you have a list of cores that are already integrated that somebody could go take a look at to see, can I get this off the ground in 8 weeks? Do you have anything like that would be available to people today?
We do. Yeah. It's on our website, investify.co. And yeah, you can go there and see if we're integrated with your core already. And that implementation can definitely be streamlined.
And if it's not there, so if my core isn't listed on your website, what would be the process the credit union would go through with you to try to get it added to my core?
Yeah. So, I mean, I think first just asking us if it's an integration that we already have planned. I mean, there are 3 more right now that we're actively planning with some of the other core providers that are out there. And if it's not one of those, we're always more than happy to prioritize building new integrations, because that's really part of our core value prop. Ultimately, we want to be integrated with as many of the cores that are out there. And we have a pretty streamlined process of actually building those out now, where 100% of our development team is based in the US. And for the last 3 years, we've been building these integrations. And because of the radical transparency, I think our turnover is actually, near zero, at least on the engineering team. And so it's the same people that have been building these integrations for years now, and would be happy to do so for a credit union that we don't currently support.
And then my last question that I have, at least for now. So one of the things you talked about was credit unions are concerned about deposits leaving the balance sheet and going off book. And there's still a liquidity crunch in this country, specifically in the banking sector. And so that would be a concern for a more conservative or traditional thinking credit union leadership team. So how would you try to help them offset or think about it differently? Yes, this is happening. What are the benefits that they're going to get on the backside by offering that and other people aren't?
Yeah, so it's really measuring just the deposits that are flowing out. So at the start of the program, we'll take the last 12 months average of how much is leaving on a monthly basis. We actually have a list of line items that we'll query. So like Robinhood, TD Ameritrade, Schwab, et cetera. And then we track the deposits that are flowing out, and those are going down over time. So this solution actually does help protect those deposits and keep them in-house, because many of your members that you've built generational relationships with would rather do this trading with the credit union or through the credit union's online banking platform than they would a third party that they oftentimes don't trust. So that's the key KPI that we measure. And then, the other one, it is a great marketing tool. Robinhood grew from 0 to 22 million users in 7 years. And while, a lot of credit unions probably aren't going to grow to 22 million members, it's still proven to be a great tool to attract new membership.
Caliber's 2023 Global Financial Services Reputation Report found that nearly a quarter of consumers are likely to switch their bank in the coming year. While this study focuses on banks, there was a 2023 Customer Loyalty Index that shows a 14% drop in loyalty across the U.S., with consumer loyalty falling from 79% in 2022 to 68% in 2023. Now, with loyalty declining, growing share of wallet seems to be key. MasterCard data and services suggest that increasing share of wallet strengthens customer connections and boosts loyalty and reduces churn. James, what strategies are you using to increase products per member?
It's interesting. I've had a debate with people who've been on this show about this exact topic. And for me, it is really simple. It's connect the products together, right? So what Keanu and I were talking about earlier about make it easy for them to want to do more business with you. So if you're going to do deposits and you're going to do loans and you're going to do investments and you're going to do all these different things, make the products connect in a way that's beneficial for your target audience. But the first thing you have to have is a target audience. One of the things that credit unions struggle with all the time is they want to be all things to all people. And that's just not likely to happen. So if you think of a primary financial institution as the only financial institution, you're probably going the wrong direction. But if you think about, we've got a target audience, we know who we want to serve, and we know what they're looking for, connect the products together to make them more attractive. That's the key. I think that's the secret sauce to help people go from we're only got 1 or 2 products per member to 3 or 4 products per member, because it makes sense for them to do business. There's something in it for the consumer to want to do more business with you. And so that's what we're doing here is we're trying to connect our products together in a way that's meaningful. One of the things that I've talked about is the 1/4 point discount on a loan for automatic payment. Well, is that really that attractive? Or is that kind of like offering somebody a baseball card and a pack of gum? Like, what are we doing here? Let's give something that's valuable, that's going to be enticing to the member. 1%. I'm going to give you a 1% discount if you do more business with us. And that's going to have an impact on your bottom line each month. And I'm going to show you the savings that you're going to have by doing more business with us. Things like that, I think, are really critical. That's what we're building right now.
Kian, the thing that I think about when I think about InvestiFi is exactly this. I think it's another product to give a member that can make them stickier. At least that's how I feel about it right now. So talk to me a little bit about, do you feel like that is kind of what InvestiFi does, among other things, is it's creating an opportunity for credit unions to just increase share of wallet and have more product penetration?
Yeah, I mean, if you look at products per user with other fintechs that compete with credit unions like Robinhood and SoFi, I mean, those are great examples of them taking that exact strategy, right? I mean, Robinhood started as a self-directed investing platform. They grew to 22 million users, like I referenced, over 7 years. And then they launched a checking account. And then they launched a high yield savings account, which they have now, right? SoFi, same thing. Like SoFi used to be a lending company, and then they offered investing after that, right? And now there's also high yield savings on SoFi. And that's a trend I think that we're going to continue to see accelerate amongst fintechs. And so what we try and do at InvestiFi is give credit unions those same tools where they can increase share of wallet and get better engagement across other products that they have. And that's really the main thesis here. Our solution in keeping deposits in-house enables credit unions to do more lending, to generate more interest income, and do all the other things that credit unions need to do to keep their members engaged within their own credit union walls.
And James, you kind of had a little back and forth online after our Greg Gallant episode, because Greg pronounced that the days of being a primary financial institution are through. They're dead. In your estimation, though, what have you seen that has increased loyalty? Is it product penetration? Is it simply Josh has 5 products now and he's more loyal? Is it that simple?
No, I don't think so. I think, again, this is not an easy nut to crack, right? But when you think about it, you have to start with, who are you serving? So going back to the 22 million people on Robinhood, for instance, they developed a base of people that wanted to do business with them because what they were really good at. So at the credit union, we need to get really good at something and then share that with our membership. This is what we're going to do and what we're going to do really well. And there's going to be a group of people that are going to be attracted to that, like a magnet. Okay, now we want that. Okay, great. Now that you've got it here with this, we're going to give you all these other things a little bit at a time that's going to enhance your experience with us. And it's going to make you feel like, oh, this is the place I want to do business. That's how you're going to eventually become that. If you just try to just drop a bunch of unintegrated random products out there, you're probably going to find a little bit more failure than success. And you're going to get frustrated with, why are people not taking all these products? They're great. They're not connected. There's nothing that's enticing them, that being the consumer, to actually take these products, because they're just a pile of things that are out there for people to pick through, like they are at a salvage sale or something.
I just heard a mic drop. I don't know if anybody else heard that, but I think I just heard a mic drop. Kian, talk to me about, you've looked at the data, obviously, in terms of what you've seen in terms of success stories working with credit unions or financial institutions. Is there anything that you point to as a success story that's like, yeah, we came in, loyalty increased, or just something you can point to that kind of suggests that, yeah, like something like an InvestiFi does in fact increase product penetration and therefore loyalty?
Yeah, so I'll say it's very early days with our stock trading solution. Like, we just launched that. And so most of the data that we have is still dating from our crypto solution. You mentioned you had Greg on this podcast, and Greg is actually one of our clients at WeStreet. And so I'll say a success story from WeStreet that a few that we're actually really excited about, offering crypto, or in their case, crypto, but it could be applied to any other asset class as well. They actually put billboards around Tulsa, where WeStreet's based, and they got multiple people coming in and signing up at the credit union just because they're offering crypto. And of note, there's been a few people that have deposited, I think, and Greg could probably correct me on this, but I remember hearing that there was somebody that walked in and literally deposited $100,000 to open up an account, a checking account, which they were intending to use to buy crypto. And that right there, I think, is a good ancillary data point of using this as a tool to be able to drive new membership and increase your deposits.
That brings us to the end of the show. Kian, do you have any final thoughts based on our discussion today?
The purpose of this show is growing your credit union, and I think there's meaningful things that you can take away to be able to put this into practice. So I think the transparency aspect of it is huge, especially when you're looking at new products to be able to adopt for your credit union. I think it's really important that there's transparency across departments. And we see that firsthand at InvestiFi. When we're selling into a credit union, our product and solution really touches almost every department, right? Because finance has to be involved. You have to have marketing that's involved, obviously operations that's involved, customer or the member experience team that's involved. And so, the transparency throughout an organization, I think, at a credit union, I think really helps credit unions drive the why behind they're going to be adopting new products and how they're going to go about integrating those into the credit union to drive more value to the credit union, to their membership.
And how can people get a hold of you if they're listening? Maybe there's some listeners that are like, maybe I'm not ready to jump on InvestiFi's website, but maybe I am interested and I do want to talk to Kian himself about this a little bit more. What's the best way to contact you?
Yeah, reach out over LinkedIn. My name is a little difficult to spell, but Kian Zareshta. I'm very active on LinkedIn, or drop me an email. I left the last name out of my email intentionally, so it's a little easier to spell out. Kian, my first name, at InvestiFi.co. I'd love to hear from anybody.
James, final thoughts.
When we cover the different topics that we've talked about, I think when we talk about transparency, it's transparency both to the consumer, I think, but also to the internal stakeholder as well. And if you start with the internal stakeholder, what are you saying to that person? You're saying, this is the direction that we're going. This is why we're going this direction. This is how you can contribute. And this is what it means to you. And as a result of that, then what the consumer gets on the other side of that is this ability to connect to unique products that are targeted for a specific audience. And it can really, as we've been talking about, help you grow your credit union by thinking about things for the specific consumer that you want to serve. And so I think that's something that's really important as we think about how we're going to grow our credit union. It's finding unique products and unique delivery places to actually connect with an audience that might otherwise not know that we exist. For instance, being on a billboard to say, hey, I want to go drop $100,000 in an account because you know what, they're offering something I don't see somewhere else. That's how you create niche spaces and opportunity for credit unions to connect to an audience that otherwise isn't being served. And creating that value across all stakeholders is so critical. And so I'm glad we've had a conversation around that today.
James, for those people listening and they're thinking, you know what, James was spitting hot fire on the microphone today, I want to get a hold of that guy. What is the best way to reach you?
I'm active on LinkedIn as well. I post pretty much every day, Monday through Friday. You can find me there. You can call me anytime you want. It connects Federal Credit Union. I'll be happy to have a conversation with you. If you can get in touch with me, jmcbride at connectsfcu.org. On LinkedIn, wherever you can find me, I'm happy to have a conversation. I'll help anybody that asks for help. So, let's go make our industry better together.
All right. I want to thank you, James. I want to thank you, Kian, and I want to thank InvestiFi. Remember, go check out InvestiFi.co. That's InvestiFi.co. And a special thanks to you, our listeners, for continuing to support and listen to another episode of Grow Your Credit Union. Remember, if you like the show, please follow us on your podcast player of choice and share this episode with someone who would benefit from listening. If you want to be a guest or would like to talk about sponsorship opportunities, head to growyourcreditunion.com to learn more. Thank you for listening, and we will see you next time. Take care, and bye-bye.